This is the Friday, August 17th, 2018 version of the Market Plus segment. Joining us now is Don Roose. Don, welcome back.
Thank you very much.
Don, we didn't get a hit cotton during the main program, so I wanted to make sure we touched on it here during Market Plus. With Thursday's close higher, does that indicate to you that a short-term low is put in?
Well, you know, the cotton market's like some of these other markets. You know, it's just had a terrific rally to the upside. And, you know, I think that the cotton market is very dependent on some of the trade that we have with China, with the U.S., similar to some of these other commodity markets. So, you know, I think if the trade negotiations improve, probably can see another push to the upside. You know, if not, I think it's a market that relaxes back again. You know, I think it's probably realistically caught in a range of somewhere between the 75, 80 on the downside and probably 95 to a buck on the upside.
What about from a weather perspective? We're still factoring in some of the drought and loss of quality, I'll call it, in the Texas Panhandle region. Is that still playing effect in the markets today?
Well, I think that from a U.S. perspective is the thing that gives us support on break. So I think most definitely, you know, and always, like we say in a lot of these markets, weather ultimately comes out to be a factor, and it was there again this year.
Absolutely. Don, let's take some social media questions. We've got a couple of good ones this week I want to make sure we get to. We're going to start right off the top here with Minda Moore. She's wondering about the direction of corn yield from August to final in other years with this fast maturing crop.
Well, one, that's a good question, but typically the yields go up once the crop gets bigger. It continues to grow like it did, you know, this last year from July to August. It went up. 4 out of the last 5 years, that's what we've done. The real issue is the last time we had a crop mature this fast was 2012. Of course, 2012 was a drought year, so I think that's the reason that the trade is very concerned that rather than have a yield that's going up, that either it stays the same or even contracts a little bit. And, you know, again, I think we're going to get a prelude next week when the Farm Journal tour goes through. Yes,
I think we will. Everybody will be watching. I'm going to switch it up here, so I'm sure our producers in the back will have to follow along. But I think Adam's question here plays nicely into that. Will the early harvest start pressuring prices before August is up?
Well, you know, it can go both ways. Typically, that's what it does. But, you know, in bull years, which this, you know, who knows, it could be, if the yield is smaller than the trade thinks, you know, then the market goes up during harvest, and it peaks in harvest when normally you're putting in a low. So what you're on the watch for is a contra-seasonal market this year. Remember, we're going to start harvesting in the south first. Those could be some of the poorer yields, but we'll see.
Don, with the weather issues, or if we do see crop progress to our next week's come back with a lower yield than what the USDA has put in the last report, how much strength will that add to the market with all the trade and political tension that we've been seeing?
Well, one thing, I think it's the government is the one that only really counts. So I think the trade will be respectful of what we're coming up with because it's real people going through real fields, but it's going to be the government that's the ultimately is going to be the real factor. But, you know, it's a market that I don't think the downside is huge, you know, 10 to 20 cents in corn, and the upside is just an unknown yet. You have big carries in the market. You have a 24-cent carry from December to July, so you get up to $3.90 on December corn. You know, that's really $4.15 out into July, and that's for next December 19. That probably puts you up to $4.25. So, you know, some of those areas get to be a little more respectable.
Don, we talked about a strategy for soybeans during the main program. Let's walk me through here a strategy you would be looking at right now for corn going into harvest season. Well,
one, you know, I think going into harvest, you have to be respectful that you can have a harvest break, particularly if the yields are big and you can't tuck the crop totally away. Remember, we have over a 2 billion bushel carryout going forward. But, you know, I think from a producer standpoint, if you have storage, you have to take advantage of what you have in the marketplace. And what we have is a carry in the market. And even today, you can buy July 19, that's the same crop you're harvesting, 410 puts. You can still give yourself a window up to 490 on July 19 corn, which is respectable. You know, we haven't been over 450 something here the last 4 or 5 years. And then, you know, if you don't want to pay that much, you can put a window downside and say we're not going to get much under 370. So you can do a 40, 50 cent window down and give yourself about 90 cents to the upside. 80, there's nothing wrong with that. That's good for a producer, and it's good insurance policy.
Okay. Let's take another social media question here about hogs, because we didn't get to give hogs their full glory during the main program. Andy would like to know, do some recap for us on what happened to the hog market in 1998 compared to the hog market now. He said some of us young producers were in 3rd grade in '98.
Yeah, well, you know, we've had some wild swings in the market. The last time we've had a disease problem was the PED virus year. Well, and I think that's what the trade's worried about now, with China having 50% of the world population, worried about they could have a problem there also. But, you know, in some of those years where, you know, we had years where you just ran out of capacity and you couldn't process the hogs. That was the, you know, the biggest issue that we had in some of those down years. This year's really not that. I mean, we have basically enough capacity, so I don't think that's the problem. It's going to be if we can sell the pork, if we can resolve some of these trade issues. But we have a mountain of pork out here. I mean, I think it's wonderful. We just had a $11 rally in 7 days, but I think you also have to make sure you get some insurance on some of the, I mean, you have summer hogs getting up to $78 to $79. We're going to have 4.4% more hogs than a year ago, so you can certainly do some kind of a window contracts out there that make some sense.
With the African swine flu going on in our large production that we're sitting on here in the U.S., how much of a production issue are they going to have in China for us to start to see some demand pick up, chewing through this wall of pigs, I'll call it?
Well, remember, first of all, we have a 62% tariff on with China right now. So, I mean, it doesn't look like they're going to take anything soon. And that's what I mean. It looks like China's boxed into a corner on some of these things. We're going into harvest on soybeans. They need soybeans. They have a tariff. It looks like they have a little bit of a disease issue. Who knows how big it is, where they've shut out, you know, pork imports from the U.S., basically. So, it's one, when you've got when you have 1.3 billion people to feed, I mean, you have to be aware of your surroundings, and I think the pressure seems to be on them right now. But, you know, let's wait and see. That African swine fever, I think the big issue was they found one. They thought they had it under control. They found another outbreak, and it was miles away. I think it was 1,400 miles away from the other, and those hogs traveled to a slaughtering plant hundreds of miles, and it can be transmitted by not only people, animals, but also vehicles. So, I mean, it's dicey, and we closed more than a traditional limit up on Friday, up 312 on October.
Definitely something to continue watching. Don, I want to take one more social media question here, switching tracks a little bit to talk about fuel. Jeffrey Cole would like to know what's keeping fuel costs up. Generally, isn't fuel cheaper with a stronger dollar?
Well, it is, and we also had a stock build at the same time. But you know, we've had some issues around the world. I mean, Iran, we have some. You know, they're an exporter. We have some talk issues with them. We have Venezuela. We have some trade issues with them. So, I think it's you know, it's some of those world issues. You know, is really what's keeping the fuel up here.
Don, I wanted to end on this. Your opinion, basically, because I kind of have been trying to get every analyst's opinion about the trade and tariff discussions as they've come on the show, and you had an interesting opinion that I don't really think a lot of analysts have taken to this point. In talking to producers, a lot of them think that this is going to be resolved by, you know, December or the end of this year. What's your take on all of it? You had some interesting thoughts to share off camera, and I want to make sure we get them on the record too, so to speak.
Yeah, you know, I think when you look at it from a trade standpoint, the Chinese are really boxed into a corner because this is a time frame where they really need soybeans. You know, they rely on us heavily for about you know, a third of their total imports. So I think the pressure's on them. I think the timing's been terrific, and I wouldn't be surprised if we get things worked out, negotiated out sooner than you think. And also remember, we have the midterm elections also, and sometimes that plays an influence.
All right. Don Roose, always a pleasure.
Thank you very much.
Join us again next week when we look at how processors are bumping up shackle space to handle more hogs, and John Roach will sit across from me at the market-to-market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.